Palisade Radio is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome to another episode of Palisade Radio. This is your host, Colin Cattell. A brief and exciting note before starting: we've just begun a silver giveaway on Palisade Radio and Palisade Research. We'll be giving away 1 ounce American Eagle silver rounds each and every week, and each and every person that signs up gets a free 13-page report on silver that we've put together, talking about the fundamentals for the metal, how to buy it, and some really interesting charts indicating where silver might end up. Then if you share the giveaway with your friends or followers, you'll get multiple entries into the silver giveaway, meaning a higher chance of winning an American Eagle 1 ounce silver round. Just go to palisaderadio.com or palisade-research.com. You'll see the giveaway prominently placed on both sites. And in the spirit of real money and the silver bull market, we've brought back on a Palisade Radio favorite. You can see him in front of you, Mr. David Morgan, publisher of the Morgan Report. David, welcome back to the program.
Well, thank you, Colin. It's good to be back.
Well, last time we had you on, it was much different timing. Silver was at a low in the bear market that had gone on for about 5 years, and then we had gold and the gold stocks and silver stocks start to take off in January, February, March, but silver was lagging. Not anymore. It seems to have really started to get some legs. What do you think's going on with the silver metal?
Well, it's been trading differently basically throughout this year, 2016, pretty much from January forward. One of the prime reasons is that the SGE, the Shanghai Gold Exchange, which primarily deals in the physical market, has pretty much matched the orders with the COMEX, which means that for so many of the bullion banks that are short precious metals continuously, and as the price increases, they continue to short further, building up what's called the open interest, or the amount of metal that is shorted. The other side, there always has to be a match, is taken on by the Shanghai Gold Exchange, which puts us in a situation that we really haven't been in previously, because the banks have infinite money, as we all know. They can create it out of thin air, and they get an advantage by being quote-unquote hedgers. They can use 30% less money for their margin requirements. So if you are a hedge fund or an individual and the broker requires, let's say, $1,500 per contract in order to be short or long, just for a contract, you as a bullion bank have the advantage of having a 30% less amount of money, or what I'll call currency, to hold the same exact amount. So it's an advantage that was brought to I brought it up several times actually early on. I haven't harped on it much, but this was discovered by Chris Palgata recently, and he, makes note of it. Of course, it's, anyone that's traded commodities as long as I have is certainly aware. And this isn't just in the precious metals. If you're a legitimate hedger in the wheat market or whatever, and the theory behind it's actually valid. I mean, basically, if you are producing the product, like wheat as an example, and you've got a lot of capital tied up in equipment and seeds and labor and all this stuff, so you're legitimately hedging, and the exchange will give you an advantage because you're actually going to produce the commodity, and therefore for you, your ability to hedge your profit will give you this advantage. So I'm actually not against it per se, but if you move back over to the precious metal side, none of these banks produce any metal. And so why should they have that advantage? But anyway, let's move on.
Well, David, there's been maybe a bit of a breakdown that we've seen in society, a little bit of general discontent this year. It's hard to know if that's anything different from years gone by, or if we're just more focused in on it as individuals, or the news is focusing more. But you've got the recent events in Turkey, Obviously, these police shootings that have been happening in the United States have gotten a lot of press, and then you've got kind of this outside contender in Donald Trump running for the election and his campaign looking more viable by the day. Do you think that these factors are playing into the movement in the precious metals?
Absolutely. You hit the key word, individual. As the societal structure breaks down further, and the political structure becomes more uncertain, and not just in the United States, but on a global basis, people move more toward their individuality. In other words, they have a survival instinct, and they move more toward, how am I going to survive? How am I going to come these hardships? What can I do? So you'll see further and further breakdown, and you come into what's called SOCs, which is self-organizing communities. So it goes from top-down control, which we've seen throughout the political spectrum, and it's basically on top of that's the whole banking system, down to where, I've got to survive. How am I going to do that? And individuals basically take to the streets, which we're seeing, basically in a lot of areas, as you outlined. How does it affect the metals? People will have a distrust. So the trust or confidence in the system starts to deteriorate more and more and more. More people wake up at a faster and faster rate. So it starts to accelerate. As that takes place, they start to look for what can they do individually that will have meaning for them. And the precious metals have been basically used as a way to trade for thousands of years. No fiat system has lasted anything close to that long. And this one is breaking down. So people seek, what could I have that I'd be able to use? If you look at the film if you go to my website, themorganreport.com, and you just put in your email address and your name, you'll get a report called Riches and Resources. There's two very important films that you have linked for free. One of them is the Four Horsemen film, which is a lot of critical thinkers talking about the Age of Empire and why this one is dying like they always do. That's kind of a cycle of life type of thing, and it's well done. And the other one is, it used to be called The Empty ATM. It's renamed, I forget the new name, but it's a documentary on the collapse of the banking system in Argentina in 2000. And I get often asked, well, what's it going to look like when it happens in the United States? Or what's it going to look like when it happens in Europe or wherever else on the globe? And that's a good documentary to get a pretty good perspective on what it'll look like. Will it look exactly like it looked like in Argentina and the United States? No. But you will get an appreciation for what it will, what it could look like, because it's not hypothetical, it's not theory, it's what actually took place. My comment on that movie, if you care to get that free report, Riches and Resources, you will find that the finance minister of Argentina was asked what his thoughts were during this crisis. And he said he was really astounded at how civil and moral the people were staying during this very, very difficult time frame. And I would second that. And I wonder, while watching the movie, I've watched it like 3 times, if that amount of civil order would maintain in the United States. And my personal perspective is it would not.
Well, that's a very interesting perspective, David, and something that a lot of people don't want to talk about. But let's talk about maybe some of the other factors you see that have kickstarted this bull market, because we were in one of the longest, if not the longest, bear markets in the stocks, the precious metal stocks, and the precious metals themselves. And we just had this dramatic turnaround in January, and I guess after coming out of such a deep and long bear market, one would expect a very nice rise to occur, which we've had. But any other factors that you've seen that have really kickstarted this into motion?
No, Colin, I think you've outlined it. I mean, I'll just add on. I mean, the one that actually coined the phrase, the cure for low prices is Jim Dines, even though Rick Rule says it often. I don't know if he gets credit to Jim or not, and it's not really that important. It's just I happen to know that fact. I followed many in this financial industry for a very, very long time. No, I mean, there were so many things. Basically, any commodity, be it, again, wheat or whatever, you cannot continue to produce that commodity if you're losing money continuously. So once we got to a level where most all mines in the world, with the exception of just a couple, were able to produce silver at a profit, basically they start closing down or going on care and maintenance or curtailing their production or going from 3 shifts to 1 shift, or they do whatever they have to try to mitigate the damage as long as they possibly can to stay in business. But at some point, they just have to throw in the towel. We're at that point in the silver market. And because of that, that starts to contract supply. We didn't really see a huge contraction supply. What we did see was a lot of potential new supply that would or could have come on the last 3 or 4 years, not come on because the prices were not sustainable. They couldn't produce at a profit, so therefore they never really went further with the projects. So that's really, I think, kind of a philosophical but also true idea of why it finally turned around. But the main reason is, as you outlined, it's basically because there is a move for people to protect themselves on a financial basis and other means, because this is going to be more than a financial breakdown. It's going to be a breakdown as we're witnessing across the board. The political systems aren't working. The leadership roles across the board, be it fascist, socialist, communistic, democratic, or whatever, they're all breaking down. And this is, again, the main driver that causes people to take action of some type, whether it's destructive or constructive. They will take action.
I think my listeners are probably going to get a little tired of hearing this question because I've asked it to quite a few people over the last few weeks, including Eric Sprott, Rick Rule, and a couple others. My question is, if there is to be a crash in the stock market, and I know this is on a lot of people's minds, especially precious metals investors, you've got the stock market at an all-time high, and now you have precious metal stocks really coming off a low. They're up 100 to 200%. Are you not worried that if we do have a collapse of the financial system, that just like in 2008, you'll have gold, silver, and particularly the gold and silver stocks hit very hard along with everything else in a sell-off?
Yes. Yeah, I've been pretty consistent on this point. Stocks are stocks. I mean, even if they're a gold stock or silver stock, the people that work with the biggest influence are the people that have the most money, which is primarily the brokerage houses, the fund managers, the sovereign wealth management, that type of thing. And most of them really have no philosophical tie to gold or silver whatsoever, like I do. So when they see the market start to move down, they will sell whatever they have to. And if their gold stocks are up 200-300%, that's easy for them to sell those because everybody uses leverage. In fact, use way too much leverage. So it's great on the way up. If that's your betting, you're betting on the way up. Or conversely, you can make money on the short side as well, as we all know. Regardless, you will come into a situation where those stocks will go with the general market. However, it's very important to understand, and you can verify this by looking at the 2008 crisis. The first thing to come up is gold. First of all, gold did go down, but not down in percentage terms as much as most asset classes, particularly stocks. And gold and silver were the first to rebound on the upside, and the gold and silver mining shares were also one of the first to rebound up. So gold is the most negatively correlated asset to the stock market. So you'd want to hold gold, even if it goes down in price. It wouldn't be the time to sell it. And if you're nimble and you wanted to protect yourself by hedging or shorting it, which I wouldn't recommend, but you could, then you have to be very nimble to go ahead and find that bottom and go long again, which most people wouldn't be able to do, but some could. And the other part is just basically to hold on. Or if you do what I do, you'd probably be on the sidelines with part of your portfolio. The other core positions would be just held through that bottoming process. Probably be a V bottom, I would imagine. But yes, they're stocks, and they get sold just as much as the other part of the market. Had you asked me that question a few months ago, I would have said not to even bother because they were so low and so undervalued, they really couldn't be pushed any lower. But at this point in time, certainly they will go with the general market.
As an extension of that question, I've had somebody raise this question with me recently. if gold and silver goes up in a not necessarily financial collapse, but some type of event where either the bond market or the stock market sells off considerably, do you think that in an environment where gold and silver prices are rising, that the gold and silver stocks can go down significantly? And I don't just mean over a day or a couple days. I mean, over some meaningful period.
No, they follow each other. Their correlation is pretty strong, with the exception I just gave. I mean, in fact, again, in 2008, everything went down, including the physical price of gold and silver. Silver got under 9 on the exchange, but yet it was at 13 if you're buying it off of eBay or any dealer, because you couldn't get retail product in size without paying up a substantial premium. So that kind of gives you an idea of how tight the actual physical market is for silver. So no, they'll follow. In fact, it could go the opposite. If the physical market becomes so tight that it goes close to no bid, meaning that most people that are holding it so dearly that they don't want to sell, that will cause the bid to go up and up and up and up until somebody says, I'll trade, something real for something, for some amount of paper. And as that market becomes tighter and tighter, then people will actually rush into the next best thing. And the next best thing is a physical mining entity that actually pulls the physical product out of the ground. That would be your top tier mining companies, your mid tier mining companies. And of course, the juniors will become a feeding frenzy at some point, but not initially, because as the market continues up, and like in the 30s, where gold was outlawed, the best thing you can do is to buy the mining shares, and Homestake and Dome Mines were the two stellars at the time. And these stocks just continued to go up and up and up because they were bid, and it was about the only way you could own gold legally at the time. So we could see something similar. So I would say, I don't know what the other people answered on that question. My answer is very strong, and that is that I would think after some kind of washout or quick 2-day, 3-day, whatever, week-long, problem with it following the market, the mining shares following the market, they would probably come back stronger than ever, especially if, as I outlined, the physical market started to get tighter and tighter.
David, now that we're in an uptrend and people are making money, a lot of people are looking forward and saying, when is it going to be time to exit this trade? And that's a long way off, and most people can agree on it. But I have a loaded question for you here. Speculating on actual price targets for where gold and silver will end up is not really a worthwhile task, because there's so many things that can influence, the prices over time. But taking gold as an example, how long do you think till we hit the previous high of 1900 something? And it would be very rare in a situation where something tops, takes 4 or 5 years to kind of settle out, and then stops once again at 1900. My point being, I would think we'd have to go much, much higher than where we've already been. With the precious metal stocks, we've had a 4 or 5 year consolidation. Once again, if gold's going to overshoot where it was before, one would think that something like the Huey is going to go a lot higher than where it topped out 4 or 5 years back. What are your thoughts on this?
Well, a couple. One, if you look at, Jim Rickards, the new case for gold, he's talking about $10,000 gold. I certainly wouldn't rule that out. We're in a unique situation globally on the economic system and distrust and loss of confidence. The banks are all broke. Most people that are astute understand that, and they're looking for some means that will offer them some type of financial protection. Gold is number one in that case, silver probably number 2. So that's the first point. The second point is that we will see, more discontinuities throughout the system and other problems that we've already witnessed, the social unrest that we talked about earlier, that type of thing. So this puts a kind of an underlying level to where we'll see a new floor on the metal. So I think the bottom's in for gold and silver. But if you want to be absolutely certain, technically you want to see silver above 26 and gold above 1550. And when they both reach those metrics and stay there for, let's say, a few weeks, then you'll see an acceleration up to the old highs of about 1900 in gold. I think silver will lag for a while, although it's a hard call because silver is a little more difficult to analyze than gold. But you'll see an acceleration. So if you are more toward the mainstream that, silver and gold have certainly caught fire for 6 months, and they're cooling off, and they're really not that viable an asset class and that type of thing. Pretty much here from the mainstream, and you want to be certain, and then you could wait for those levels, the 26 level in silver, 1550 in gold, and at that point you'd still have a huge up move, because this move is probably going to go through 2018, possibly longer. And it will, in my view, and it's a strong one, be probably the biggest move in the precious metals complex in modern times.
Wow, quite the call. I hope you're right, David. I want to talk to you about another company you've recently launched. This isn't something you asked me to talk about, but it's very interesting to me. It's called Lemuria Royalties Corp, and it's essentially a private royalty and streaming company you've put together with a couple close people in your network. You've raised, in the big context of things, a small amount of capital, and I don't ever want to marginalize the significance of any amount of capital in this market, because you guys are trying to service a niche market and something that's potentially very profitable, being small mines coming into production. Can you kind of define, for our listeners, the idea of royalty and streaming and why it is such a lucrative business?
Well, there's two different business models. There's a royalty business and the streaming business. Streaming business, basically, you provide capital or money to the entity, the mining concern in most cases. They take that and let's say they increase their mill throughput from, let's say, 500 tons per day to 1,000 tons per day. With that money deployed to them, you get a stream of the new production rate for the life of the mine. That's a very simplistic example, but it's very precise. As far as the exact numbers, they vary project to project. On a royalty, basically, it's more like a smelter situation where you get a return on capital that's set. That's a certain amount, like a 2% net smelter royalty. So everything that the mine produces, as it goes to the smelter, you get 2% offtake on that every time there's metals produced. So they're slightly different. The royalty model is pretty much used. They're both used. Silver Wheaton's primarily a streaming company. Royal Gold's primarily a royalty company, but we're able to do both, and other companies are as well. So it just depends on what the situation is, and we look primarily at IRR, internal rate of return, and we're looking at numbers that are significant, especially in today's marketplace where there's such small yields throughout the bond market, as an example, and even through the corporate bond market, even the junk bond market. You can stretch for yields and buy junk bonds, but the yields still aren't very high. Whereas with our situation, we're looking for an IRR probably at 15% or higher, and probably wouldn't do a deal unless we could see those types of internal rates of return. So if you're interested to learn more, we just go to the website, lemuriaroyalties.com. There's a press release. We've already done one deal with Hochschild through Fortuna. And, we've already kind of proven that we have the contacts that are necessary on both sides to get a deal completed. And, of course, we're still raising capital.
Great. So that's just to spell it out for our listeners, LEMURIA royalties.com. Of course, David has themorganreport.com, great resource for anybody investing in the precious metals sector. I would advise that you go there, sign up. David's got some free reports, and then, of course, a premium service for those interested. David, final question for you. Price targets in mind from a technical standpoint for the end of the year on gold and silver?
Well, play the fool's game. I'm certainly, it's funny, I've had a hot hand on that actually way back when. Certainly not my forte, although my short term are more, anyone who subscribes to me knows how good my calls are. And they're not perfect, but they're very good. But they're more short term, like, a few months out. In fact, I'm actually looking for this correction or pullback, which we're witnessing now as we're doing your show. And I think it will continue, actually. But anyway, going forward, I think if we got to, $22 silver sometime during this year, I'd be very happy. And gold-wise, $14.50 or so, I think I'd be very happy. I'm not sure we'd get those breakout levels that I talked about, 26 and 15.50. this year, but I certainly believe we'll see them in 2017. So this year will be a good year, but not a great year for the precious metals in my view. And of course, sorry, and I don't like to talk out of both sides of my mouth, but it's required that I must do so. And that discounts the fact that there's some huge political or financial upheaval, like let's say Deutsche Bank going down, which could put in a panic buy into the metals for probably a short period of time that could take them on a spike to who knows what level. But that remains to be determined. So I have to kind of throw that in there because that's the real world that we're living in.
All right, David, thanks so much for coming back on the show. If you have anything else to add, go ahead now. And it's always a pleasure.
If you want to look at the kind of news I read, you can go to our Twitter feed. You can just type my name into Twitter, it'll bring it up. And for those that are inclined to watch videos or listen to audios, we have a YouTube channel called Silver Guru.
David, thanks so much for coming on the show.
My pleasure. Thank you.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?